Hey guys, this is Joey here, founder and chief trainer at Trading Possible. So today I'd just like to go through some of the reasons I made certain calls, I issue certain calls to my clients. What's actually the thought process that goes through my mind whenever I issue or any trading calls and also trade, right? So just take a look at this counter called Singapore Post, right? So before I go into it in detail, we can just take a look at the trend. So you can see that it has been moving up since 2012 gradually all the way to April 2014, and the incline started to accelerate, right? So it has been sloping upwards very gently, and all the longer term 100-day moving average and 200-day moving average has been slowly inclining or moving upwards, right? So just along here in February 2015, just last year, we started to see some weakness, and we started to see it actually retrace back to the support level. So before I go into it further, let's just draw some of the support and resistance lines to get a real feel of this chart, right? So let's just draw some lines first. Okay, so let's draw one line. I think there's a support around here at 170. Okay, we have another resistance and support at 180. Okay, and let's just see. Okay, we have another support at 160. Okay, it seems somehow it seems like it's always at the 150 160 mark. Okay, there's another one here right over here at about 150 as well. Okay, so let me just go through some of these lines. You can see that it has been moving up from 2014. It started to move up quite rapidly, and it broke above that 150, move up, consolidated, for about 4 months from 170 to 180, and finally it broke above 180 and started to move up. Okay, so let's just take a look at the some of the calls that I've issued. Okay, so it has been holding above that 180 level for pretty strongly. You can see right over here, it has been holding above the 180 from September 2014 to 21st August 2015. It started to break below, right? And then that's where you started to see some weakness. Okay, let's take a look at some of the price action. We just ignore all the moving averages and the lines, these red lines and blue lines over here. Just take a look at the price action. We just look at the support and resistance lines, those I have drawn, right? So you can see that it has been supported here, okay, from June 2014 to September 2014. This was the resistance level. So it broke up above that 180 level, okay, started to move up. Okay, move up, consolidate. Okay, retrace back down. Okay, so once it retrace back down, you can see that it's actually forming a lower high. So this can be an indication that that the trend is turning, right? So right at this level, 180. Okay, so 180 was the resistance here, but it became the support right over here, right? So it break below on the 24th of August below the 180 mark. Okay, so I think there was a sell call issued by me, and it went all the way down to the next support at 170. Can you see here? 170 was the support right over here. So you can extend this line all the way, and yes, it did touch 170 and rebounded back. Okay, so 180 was the resistance for this area right over here. Okay, so it traded up, down, from August to October. Okay, 2015. Okay, started to break above 180, okay, and move up back to somewhere around 190 level. But you can see that the trend started to more or less weaken already, because it is not able to hit back above the high. So the high here was probably about 195 196, but it probably went to about 192 and started to U-turn back down. And you can see that the moving averages, okay, this is the 100-day moving average and this is the 200-day moving average. So it kind of like the price has actually crossed below the 100 days moving average and the 200 days moving average. All the while it was consistently above these 100 days and 200 days moving average, from 2014 2013, all the while. But it started to show some weakness right over here, and the price crossed below the 200 days and 100 days moving average, right? And even the 20-day moving average has crossed below both the 100 days moving average and the also below the 200 days moving average as well, right? So yes, it kind of like it was supported above that 180 level in November 2015, but then again this 180 did not hold. So this 180, as I mentioned, it was the original resistance turned support. It became resistant again around here and became support again, and finally it break down. And I think there was another call issued on the 17th of December by me. Okay, you can see the trend started to turn. So 17th December there was a call issued when it broke that 180 level, and subsequently this 170 170 level, it was the support again. If you extended the line over here, 170 level, it broke down again, okay, and it did not hold. So you can see right over here, the 20-day moving average is below both the longer term moving average, and the trend is starting to turn downwards. So that's where we should actually either exit our position. If you have any long, we have to get a stop loss or get out of any long position, or we can even have CFD sell position, which is some of the calls that we should to ride the downside, right? So yes, it went all the way down from 170, consolidated at 160. So right over here, support is at 160. So yes, it did rebounded back from 160, traded from 160 to 165, for about one and a half to 2 weeks. But 160 could not hold and break down again, and there was another sell call issued again, okay, when it broke below that 160 level, okay, and started to move down to currently what we are seeing is at the 150 support. So yes, right over here. So this 150 would be the support. I think 150 would be a pretty good psychological support. Yeah, so 150 to 155 would be the range now. But you can see that the trend is clearly moving downward. So if it were to stay below that 160 or even 155 level in the next few days to 1 to 2 weeks, we can safely say that the trend might continue to weaken, and it might even break that 150. I think it might possibly break that 150, and we can start to look at the next support from there. So let's take a look at the next support. It can probably go to look at it, it's probably about 140. You can see that there's some support around the 140. Okay, we can even draw a line lower, okay, somewhere around here, probably about the 136, okay, which was the resistance around here, okay. Yeah, so probably 140 to 136 level if the 150 do not hold. So currently the moving averages are all pointing down. The short-term moving average are all below the longer-term moving average. So this is basically looking at the price action. Of course, we can look at indicators to confirm our price action views, right? So I'll cover more on this in our subsequent videos. And if you want to find out more, you can come for precision trading intensive program, where I'll cover step by step how we actually look at the trend of any charts, and how do we position ourselves to ride the upside or the downside, and to stop loss, and to do position sizing, and get the number of shares that we need to buy, and also the 6 steps that we use to stock trading. So I call it the ultimate blueprint to stock trading. So that's how we actually establish the trend, identify, develop, evaluate, execute, and review. So that's the complete blueprint to stock trading, which I'll cover more in detail. So that's it for today's video. So let's just I'll probably see whether this 150 holds. So if this 150 were to break down, there might be if the volume volume is above average, and we close below at 150 level, there might be another call issued for a CFD sell position to ride the downside further. So what we do is, when the trend is pointing down, we take on CFD sell positions to ride the downside, instead of hoping, and I mean, if you have a long position, what you can do is really just to get out. We're not even holding long position, we're actually taking short to ride the downside. So you want to follow the trend, you want to be in the trend, you want to ride the downside together with the trend, unless it breaks above that 160 or 155 level and stay above, then we might start to see a trend reverse. Other than that, the trend is still negative for now, and we still want to continue to ride the downtrend, right? So yes, that's it for today's video. I hope you have enjoyed and you've learned something. Thank you.